So many of y'all want to start investing, but y'all don't know how, or y'all got a lot of questions or fears, right? So I'm gonna get into that in this video. In this video, I looked online for the 10 most common questions about the stock market, and I'm gonna demystify all of that for you. I'm gonna get right into it today. If this is your first time rocking with your boy on this channel, like and subscribe. I talk everything finance, but mostly stock market, day trading, stuff like that. So I'm gonna get into question number one. The question a lot of people have about the stock market is, how do I start? If you look at the stock market like a bank account, you open it the same way. You're gonna need a brokerage account. I use Robinhood. There'll be a link in my description on Robinhood. But just like your 401k, you use a brokerage account. If you have Fidelity, if you have Charles Schwab, if you want to use Robinhood or Webull, those are all brokerage accounts. So you're gonna need a brokerage account. You're gonna need to put in all your information just like your bank account. And then from your bank account, from your brokerage account, you invest in the stock market. You purchase shares on the stock market. So that's how you get started. You just need to download an app, create a profile, and make your first purchase. Second most common question that's asked is, what about a stock market crash? Stock market crashes do happen. There's been about 12 stock market crashes since 1950. Only 12 since 1950. So what does that mean? Stock market crashes do happen. It's when the market goes down at about 20%. But if there's only been 12 since 1950 and it's 2023, the stock market over a long period of time goes up. If it goes down in a crash and you've been invested for 20 years, you're still on the upside. When you're investing in your shares or whatever you're buying on the stock market, you're buying it at an average. So if you buy, say the stock is 50 and then you buy again at 70, you'll probably have an average at $60 or something like that is what your average would be. You have two shares at 60 instead of 70. So when the market crashes, that's a perfect time for you to lower your average, knowing that it's going to go up over a period of time. Stock market has made many people millionaires. I invest in the stock market on a regular basis and I'm seeing these returns. I can guarantee that you will get returns in the stock market over a long period of time. So crashes aren't something to be afraid of. It's actually something to be prepared for. So if you have extra money or whatever, you can put that extra money into your shares on the stock market. Third question, what do I invest in the stock market? That's a perfect question. In the stock market, you can buy REITs, which is real estate investments. You can buy stocks, you can buy bonds. All of these things you can invest in the stock market, but some have greater returns than others. Some are riskier than others. The best thing to invest in the stock market is going to be a mutual fund or ETF. So let me break down the mutual fund or ETF. I'll get into ETFs. ETFs, you could do your search for ETFs on etfdatabase.com, etfdb.com. On etfdatabase.com, let me get into what an ETF is in the first place. An ETF is an exchange traded fund, right? So it's a fund, it's not an individual stock. ETFs are based on the sector that the stock is in, right? So in the technology sector, you got Apple, you got Amazon, you got Tesla, you got Nvidia. All of those companies are in one sector. So there's a portion of that company, say, the best performing company will be like, I don't know, 8%, and the second best would be like 7%. So when you invest $1 into that mutual fund or ETF, it's gonna be spread out through 5 or 10 or 15 companies, whatever. The best investment, the best ETF out there is what we call the S&P 500, which is the top 500 companies. The reason why it's the best is because it averages 12% a year. So like I said, look at the stock market like a savings account. Some years it's going to do less than 12, some years it's going to do more, but it's an average of 12% a year. It's a savings vehicle for you to grow for your retirement. The sooner you start, of course, the richer you will be for your retirement. The stock market isn't a get rich quick unless you're day trading. All it's supposed to do is a vehicle to help you retire and pass on generational wealth. That's what the stock market is, unless you're day trading. So yeah, the ETF, they have different types of ETFs. You can pick the S&P 500, it averages 12%. I'm gonna mention some others that I like a lot. Invest code QQQ, ticker symbol QQQ. How you find invest code QQQ? You go on your brokerage account, you type in QQQ, and then you can go and make your purchase from there. That average is higher than the S&P 500. It's a technology industry. Apple, Amazon, Microsoft, Nvidia, Google. Those are the companies that's in that ETF. And another good thing about the ETF is that if a company actually falls out of the top tier in that sector, then it'll be replaced by another. So it's managed. Effortless investing, something that you don't have to invest in on your own, right? So the ETF that I like a lot is Investco QQQ and the S&P 500 VOO. And if you prioritize dividends, dividend is something that companies pay out quarterly. Not all companies pay dividends, but dividend is something that companies pay out quarterly to their shareholders. The best dividend paying ETF is SCHD. SCHD pays a dividend of somewhere around, I think, $1 or whatever. Every quarter it's around $70. So if you want to invest in that one because you want more of an income stream when you retire and not a lump sum amount, then that's probably the best move for you in that ETF. And you could withdraw every 3 months the dividend when you decide to retire. Will I lose money? A lot of people are worried about losing money in the stock market. Losing money in the stock market is possible if you are day trading. If you are investing for the long term, the chances of losing money in the stock market is 100 to 0. You will not lose money in the stock market over a long period of time. So look at it as a retirement savings vehicle. It's something that you need to invest in every time you get paid, but just small portions, because this is a long-term savings. So if you are new to investing, take investing out of your mind and think of it as a retirement savings account. You could even title your brokerage account retirement savings account and invest in ETFs, leave individual stocks, crypto, bonds, all that alone. If you just want a mindless, safe investment, that's how you do it. All right, I'm gonna get into, I don't know, it's the fourth or fifth question about the stock market. What about taxes? Do I have to pay taxes on my investment? Yes, in the stock market, you do have to pay taxes. You have to pay capital gains tax. So if you invest, say, $1,000 and leave it for 20 years, and at 20 years, that 1,000 turns into 5,000. You will have to pay taxes on 4,000 of that $5,000, which is capital gains tax. So with that being said, you shouldn't be in and out of the stock market. It's another reason why you should buy and hold for a long time, not only because your investment will grow longer and faster, but you will also have to pay taxes at the time of withdrawal or when the next year comes around and you have to file your taxes. Next famous question I saw was, should I invest in stock market? Should I invest in crypto? I like stock market over crypto. They're both investments. Stock market is a centralized assets. Crypto is decentralized assets. Just like the stock market has crashes, crypto has crashes, but crypto's crashes are more significant. Crypto is also less regulated, and there's not as much to go off of on crypto as there is in the stock market. In the stock market, you can look at a company's balance sheet. You could judge them by their CEO. You can look at their sales. You can look at their debt. You can evaluate the company, right? But with crypto, all you really have to base it on is, I don't know, is it going to go up or not? You know what I'm saying? In my opinion. But yes, I choose the stock market over crypto. I do have crypto investments, but it's not prioritized over the stock market. So don't get confused with all the different types of investments. Like I said before in this video, if you just keep your investment on an automatic withdrawal from your paycheck or from the bank account on the day that you get paid, just like you do your 401k, just like you do your healthcare benefits, then you don't have to worry about all these new and different types of investments. Another popular question about the stock market is, what is a REIT? A REIT is a real estate investment on the stock market, right? And REITs, what I like about REITs is they pay dividends every month. So if you want a paycheck every month when you retire, a REIT ETF would be the best scenario for you. Now, the REIT ETF, they don't grow as fast as the S&P 500. They don't grow as fast as Investco QQQ. That would be more just for dividends, which I'm not the biggest fan of REITs because they don't grow as fast. I rather a growing asset that pays a dividend versus something that pays a dividend every month. I'll take that every 3 months if it's going to build my wealth faster and give me a smaller dividend. I'm okay with that. Another real common question I see about the stock market is, can I become a millionaire from the stock market? Absolutely. The stock market has made plenty of people millionaires. It will make me a millionaire. It can make you a millionaire too. All you have to do is invest regularly, and increase the amounts that you're investing if you're able to. If not, you don't have to be a millionaire. Just make sure that you have enough for tomorrow. And the last most common question I got for y'all about the stock market is, do I have to purchase the whole share price? Right? You're gonna see some stocks, Nvidia's like $500. You're gonna see some stocks even up to $1,000. Warren Buffett's Berkshire Hathaway is like 20,000 or something high like that. You don't have to purchase the whole stock price. You could do what is called a fractional share. So if all you got is $5 to invest at a time, then you're buying $5 worth of Apple's $200 a share or whatever. But it's a fractional share. You don't need big money to get started. You can start with the link in my bio that'll give you free money towards your first investment. And then you can start with $5 at a time, but get started. Don't be scared of the stock market, man, and make your tomorrow very wealthy. I'm Mike the Money Motivator, man. Y'all like and subscribe for more content.